Hi guys, it's Abu Pasha here again. It's been, I think 2, maybe even 3 weeks since I made my last video. In the last video, you would have seen me having some issues getting a mortgage secured on the buy-to-let property in Darlington. And the issue was the valuation by the previous lender came to 85,000, but I'm offering 98.5. So we suspected that the valuer undervalued or misvalued the property. The way that we got around this was that we went to another lender who used a different valuer, and earlier this week we got something by email which I'm now going to show on the screen, and this is the mortgage offer. But the most important thing to note is the property value at £98,500, which is what we offered. So basically, that's good news. The valuation came back correctly this time round, and we're full speed ahead now. Unless something else comes up that we haven't thought of, we should complete the property purchase in the next month or so. So that's a very quick introduction to this video, which closes the problems that were highlighted in the previous video. Because I've just had a whole raft of issues trying to get a mortgage on this property due to the valuation, I'm now going to give you some tips that if you have the same problem, this is what you should do. Tip number 1, first of all, make sure that you use a mortgage broker. Go through a mortgage broker and let the broker advise you as to what the best course of action is. Most likely, the broker in the first instance will probably suggest that you appeal the valuation, and for that you will have to provide the broker with some comparables. So if you're buying a 3-bed semi-detached property in Darlington, for example, the broker will ask you to find properties that are close by, within say quarter of a mile, maybe half a mile, that have completed within the last 6 months in terms of size and stature. For example, if you're looking for a semi-detached 3-bed property, they'll say look for other 3-bed semi-detached properties. And then you'll have to provide, I think, 2 or 3 comparables. The broker will then take these comparables, look at them, and if he or she feels that we've got a case to appeal the valuation, they will send those comparables to the lender. The underwriter will then look at those comparables, compare it with your property, and then if they agree with it, they should be able to bump up the valuation. Your mortgage broker may advise you that, hey, let's just go to another lender that uses a different panel of surveyors. And if you're, well, I don't like to use the word lucky, but if you are lucky, as was the case with my property, then the valuation will come up to what you agreed to pay for it, and basically everything can go through, the mortgage is approved, etc. However, what happens in the event that the second valuation also comes undervalued? This is very good news for the buyer. Why? If the second mortgage valuation comes through and that too is lower than the price that you've agreed to pay for the property, then this is very good news for you. Because now you have 2 valuations from separate surveyors, both saying that the property is worth less than what you have agreed to pay for it. So this is good news for you. So what you should do, and this is where tip 3 comes into it, is you take those 2 valuations, you go to the estate agent, and you tell them to contact the vendor and say, look, we've had 2 different valuations. Both are lower. We need to renegotiate the price. The vendor isn't going to want to do that, but you can force them into it. You'll write out an email and explain that you've had 2 separate valuations, both are lower than the agreed price, and for that reason we need to renegotiate the price. The vendor isn't going to want to do that, but you need to explain that if I pull out of this property purchase, the next buyer is going to come along and he's going to have exactly the same problem, and most likely he will then ask you to reduce the price. This is going to waste a lot of time, so the best thing you can do is deal with me. I want to buy the property, I like the property, let's make a deal. And basically you will now have to renegotiate the price. Now if you want to, you can steadfastly force the price that is written on the surveyor's report, but most likely what will happen is that you will arrive at a price that is between the price that you've agreed, which is high, and the surveyor's valuation, which is low. So you'll probably be looking to arrive at a price which is somewhere in between. Now, unfortunately, what's going to happen is that if you are going to pay somewhere in between, it means that there's going to be a shortfall. Because remember, the mortgage company are only prepared to pay this much, but you've agreed to pay this much. So this extra part here, you will have to pay that from your pocket in cash. So be aware of that. If you don't have that cash, then what you can do is tell the vendor, the only price that I'm going to offer you is what the surveyor's valuation report says, and be completely firm on that and say it's a good price. Just explain the reasons. Tell them that you don't have any extra money to pay out. But in summary, if you've got two valuation reports, you are in a very strong position to negotiate, because now you can show the vendor that this property is not worth what was previously agreed and we've got to renegotiate. Go on to Rightmove or Zoopla and search for other properties that are similar currently on sale. If the price that you've negotiated for the property that you are interested is on the high side, you should be able to find properties for sale for less that are similar. Write down in an email that you'll send to the agent, which in turn will be forwarded to the vendor. In that email, make sure that you list the links of all the properties that are similar but cheaper, and state that if you do not agree to my terms, then I'm just going to go for one of these properties. Explain that it's not personal, I'm not angry, just explain that I simply don't have the cash and that the price that you're asking is too much, and that if we can't agree on a lower price, then I will simply view these other properties that I've listed and I'll make an offer on them. The vendor will have almost no choice but to accept your offer. But remember, this tip, it requires there to be similar properties in that area for a lower price available for sale. I bought a student let in Middlesbrough, and the price that I agreed to pay was 60,000. The surveyor valued the property at 55,000. The vendor said, I will reduce the price, but we'll meet halfway, so it's something like £57,500 he offered. I said no, 55. And then what I did was I pulled out two links in Rightmove of properties that were selling for 60,000, or somewhere between 55 and 60,000, and I told him that I could get any of these properties and negotiate a price for 55,000. So if you don't accept my offer, I'm just going to go ahead and view these properties and put offers on them. And that's all I did. I sent that email off, and within one day I got replies back from the agent saying yes, he's accepted. He will sell the property for £55,000. So I've done it and it works. I'm also going to show you the email that I used. Right, so this is the email that I actually sent to the owner. So this is what I wrote. I said, I understand that vendor wants to maximize the sale price, but I would ask him to consider the following. The property has been on the market for a while, and there are alternative properties available on the market which would meet the valuation by mortgage lenders, surveyors. And then I've listed two properties that are similar. One is 60k, one is 50k. The one in 60k in good condition currently lets all provide immediate returns. 50k condition is similar to. currently let, so will provide immediate returns. And then I wrote down, if another buyer does offer 60k, when the survey is done, most likely they will also encounter the same issue that I have. And I said, when an investor is told by a professional surveyor that the house he is buying is not worth what he's paying, any investor will either ask for a price reduction or look to other properties which are available in the market. If the buyer happens to be a cash investor, they will demand a low price. Cash buyers don't pay above market value. And then also I've listed another reason, and this is regarding the post-purchase financials. It'll cost me roughly £5,000 to sort out the single glazed windows, repaint the whole house, recarpet property. Yeah, I've just basically listed some other stuff. And then I wrote down this, right, here's what I suggest. If the vendor is determined to get a higher price, I will wait. In 2 months, if it is still unsold, I will take it for £55,000. This gives the vendor 2 months to find someone who will pay more than my offer, while safe in the knowledge that he has an offer and take £55,000. Of course, if the vendor agrees to pay £55,000 right now, then that's fine, we'll agree on that price. I'll buy it immediately. Within 24 hours after sending this email, the vendor came back and said, yes, sell it £55,000, deal agreed. And by the way, this these figures that I wrote down, it will cost me roughly £5,000 to sort out the single glazed windows, repaint the whole house, recarpet the property. That figure was completely wrong. It was closer to £10,000, I think. So yeah, so that figure that I wrote in the email, this is the first time I'm looking at this email in 18 months, 19, 20 months. First time I'm seeing this, and that figure of £5,000 was actually wrong. It was closer to 10,000. It was way more than that. I think it was closer to 13, 14,000, maybe even 15,000, because I refurbished it to a very, very good standard. If you are a developer and you're planning to do extensive work to the property and you don't want to lose this property, it's a good property, it works financially, etc., etc., then this is what I would do. Get the price down as much as you can, but don't lose the property. Once you've brought the price down as much as you can, accept it, pay for it. Use a bridging loan. You'll use a bridging loan to buy the property. After you have refurbished the property will value up. And when you attach a buy-to-let mortgage to it, you'll get all that money back anyway. You might reduce your return by 1 or 2% because you've paid an extra amount on that property. But generally speaking, it's not worth losing out on a whole property if the price cannot be negotiated all the way down to what the surveyor's report says. So I would be personally happy to pay that little bit extra, knowing that I've got the property that I wanted and I've probably drawn up plans in my head as to what I want to do with the property. So it's worth doing that. And for those of you who don't know what a bridging loan is or how to attach a mortgage to a property that you've bought and refurbish using bridging finance, there are lots of videos on YouTube, so you can view that. Right, so that concludes this section. I'm sure I'll come up with more tips regarding how to negotiate, but I'll probably do that in about 6 months' time or so. So anyway, thanks guys. Don't forget to subscribe if you want to see what's going to happen next, because remember, I still have to get the keys to this property, then we're going to refurb it, and I'm going to film everything. So you're going to see everything from start to finish, including the financial figures. So it'll give you a very good idea as to how much money I'm going to make from this property, what the return on investment is, etc, etc. So for those who want to invest in property, this is going to be a great series of videos, because you saw how we did the viewings, you saw how we dealt with problems, you're going to see the refurbishment, and then you're going to see it tenanted, and then I'm going to show you all the financial data surrounding the deal. So it'll be good for you. So don't forget to subscribe and also like the video. Much appreciated. Thank you.